Yo, what's up, guys? What's up, guys? Hope everybody's having a fantastic day. We're doing this call today. It's Saturday, early 15 p.m. It's a training call. We're gonna be working on a couple of things. A lot of people have been asking me about. They've been asking me about the EUDXY strategy and also the NAS XPS and the NAS and US 30 strategy. So I'm gonna go ahead and go straight to the to the charts. Basically, this is the way it works, guys. What you want to do first is always start in a bigger time frame, right? You're gonna start in the monthly, and what I want you guys to do on the monthly is analyze which which um which bias are you gonna have, right? So as you guys could tell, on the monthly, you're gonna draw your fibs out, right? You draw your fibs out, and you're gonna look for the premium side, right? Like you're gonna look for the discount. Anything below here is a discount. Anything up here below above the 50 is a premium, right? So up to the 100%, right? So there's our premium up here. In the premium, we're gonna go ahead and we're gonna sell, right? The premium we sell. Welcome to the call, Sal. In the premium, remember, guys, as I spoke to you guys before, in the premium, we're gonna go ahead and this will be our sell zone. The premium will be our sell zone, and in the below the 50%, that's what we call the discount zone. This is what we buy, right? So as you guys could tell, DXY is bullish right now, right? It's bullish. Like it's right here. It's like you got a consolidation right there. It actually just broke the consolidation, and now it's going into the OT entry. This is a OT entry. ICT talks about these entries. That's like the retracement, and then you have another OT entry over here, and after that you have your well, I would say this is also a OT. Like all this whole area right here is where you look for sales, right? You're gonna look for sales, but the more you study a pair, you're gonna realize which areas are the ones you want to sell at, right? So let's take the fibs out since we already know the market is bullish, right? So the market is bullish. It's on a premium. So in a premium, what are we gonna look for? We're gonna look for sales, right? So now we know that we're gonna go ahead and go to a smaller time frame. And we're gonna start looking at what's happening, right? As you guys could tell, first, let me see something on the monthly. I want to see if there's a fair value gap on this side. Yep, right there. There's a gap right there. You see that huge gap? It's about to fill that up. So we have that gap. We have the order block over here. About order block. What else do I see? I guess that's as far as we could see. See if we could go see some more stuff. Let's see. Yes, that's as far as we could see. Boom, boom. We got this highs. We got this wick right here. Yeah, that wick. This area looks good too. That wick. You want to look for areas where you think the market is gonna change the trend, right? And look, if you go backwards right here, like that area seems like a good area because here the market wick there, the market wick here, the market came almost there, then it went up, then it broke through it, then it came back up. So this area this is a strong area. So right here, this must be like this is the order block. That's an order block. All right, so we got a lot of good stuff over here. I like this area for sales, right? So now that we know that we're gonna look for sales, so most likely the market's gonna come over here to this area. This is the area we're gonna sell it. All right. So now we could delete this. We just leave like we'll leave just that. Boom. I'll delete this too. Just to keep the chart clean, I like to keep the charts clean so we could just keep analyzing. All right. So now we're gonna go into to what's happening right now. So as you guys could tell, right here we have a shooting star. So the market came to that area that we just spoke about. It tapped it, and now we have a shooting star. So the shooting star, that's an indication of a reversal, right? So when you guys see a shooting star, what am I referring to shooting star? If you guys go to Google and you type Forex candle, cheat sheet, right? Cheat sheet, candlestick, cheat sheet, cheat sheet right here, cheat sheet. So you guys got to study this, right? You want to memorize, you got to memorize this. You got to know them by heart. You really have to know this by heart. I have them in my wall. Like I have a bunch of stuff in my wall that I could just look into, and I know which candle's showing. Like let's look at this one. So over here, look. So we got the shooting star right there. So what's a shooting star? A shooting star is a bearish candle. So when you guys see a shooting star, it indicates the market is going to reverse, right? So let's go back to the chart. Look at the shooting star right there. Shooting star, big wick, small body. That's what we call a shooting star. So now I'm gonna go to a smaller time frame, and we're gonna try to look for that sell. So now we know this shooting star is there. So the shooting star is actually an order block, right? That's the order block. We're gonna put our fibs once again, and now we know it's at the OTE entries, right? That's the OTE. So it's at our zone. Let me change this color to like another color, something more light, like gray. All right. Well, let me change this one too. I like to use light colors. Easier for the eye. All right. All right. So we got the shooting star. We got the order block right there. Boom. Now, so we know the market's gonna come here, and that's what we're gonna look for the sell, right? Let's go to a smaller time frame. So you want to start in the bigger time frame and find your bias. Boom. So same thing. Bullish momentum. It's leaving a lot of gaps down here. Look, there's a gap right here. There's gaps. What else we see in the 1 hour? Let me see. Yeah, it's actually look. I know that's a DOG. Look at DOG right there. This one also signifies a change of trend. Let's look at the 30 minutes. In the 30 minutes, we have consolidation now. Look, you got the consolidation, so it's gathering contracts. In the 15-minute, boom, consolidation. A little bit of liquidity here, liquidity in the 5 minutes. Now we're breaking down the whole, there's a lot of consolidation there. As you guys could see, consolidation has been in this range for quite a while now. And in the 1 minute, so in the 1 minute, it's in that consolidation, okay. So dollar DXY is in a consolidation form right now. That's as far as I could see right now. So now we're gonna go to, we know we're gonna look for a sell. I would look for sales on this pair, right? So now we're gonna go to EU. Remember, I'm teaching you guys the EU DXY strategy, right? So now let's go to the EU. So we have our dollar marked up. Now that we know the dollar's it might go bearish now, right? It might sell. That will mean that we're most likely going to see the same thing in the EU, right? So let's do the same thing. We start in the bigger time frame. We put our fibs. It's at the OTEs right there. You see OTEs, OTE number 3. You have the same gap right there. Same gap is showing, right? Let's see what else. Boom, the gap. We have that order block right here. Got that order block. So it's all about finding confluences. That's what we call those confluences. Find the confluences, and you can find where the market is going to do the reversal. And if we catch this buy, that's going to be a beautiful buy because look at all that liquidity, right? So now we go to the weekly. Go to the weekly. weekly. Boom. So we have here though, this whole area is the area we like. It's at our OT entry. I like this area for buys right here. Like we want to see it buy, right? So we go to the daily now. So we do have the inverted hammer. So here we're showing an inverted hammer, right? Inverted hammer. We go back to the cheat sheet. It's like the opposite of a shooting star. Inverted hammer. I mean actually a hammer. Hammer right there. It's a bullish candle. That's the opposite of the shooting star, right? They all got their opposite one. Look, so you got the inverted hammer, hanging man, gravestone DOG, dragonfly DOG, Spanish spinning top, spinning top. So you gotta know your candles, right? Once you guys see candles like this appearing in the market, that's an indication of change of trend. So right here, boom. So now, same thing. We're gonna put our fibs, high is high to low is low. It's our OT entry. So from here, we want to see the market buy, right? And I'm pretty sure if I zoom in now, we're gonna see that the same consolidation we just saw in DXY, right? You see, yep, same consolidation. So it's at the consolidation stage. Boom. So there you have it. That's the strategy, guys. That's the strategy. Now we know. Now we're gonna wait. We just gotta wait it out now. You just gotta wait for the market to open. Be patient. You don't trade on the consolidation because the market could actually break through the consolidation. We gotta wait for that break and then then go downside, right? Because remember, there's something called the power of three, right? So the power of three is something that ICT talks about a lot. What is the power of three? The power of three is three phases. PO3. Power of three. It's three things, right? So you have the accumulation phase. So the first thing is accumulation. Accumulation. The accumulation, that will be the first one, which is what's happening right now. That consolidation we see, that will be the first part. Then you have something called the manipulation, right? Remember, the banks are the ones that control the market. So then they're going to do a move that is going to be like a fake out. It's going to be the fake out. Retail traders, since they know they're emotional, they usually get trapped in the manipulation. The manipulation will be something like this. Like this will be the manipulation, like a breakout to the top, right? Breaks out to the top. People think it's a buy, and then they sell it. So that's the part you want to get in. You want to get in the distribution phase. Distribution, and this is something that is always happening in the market. Accumulation, manipulation, distribution. So the distribution, that will be the sell that we want to catch, right? I'm just using my imagination and my creativity to see it before it happens, right? It might not happen exactly like this. The market might actually come back higher, like more manipulation, and we just gotta be patient. We using like our purpose in this trading market is to be patient. Just don't pull the trigger. And if you do pull the trigger like you're eager to pull the trigger, make sure you're not over leveraging. Make sure you're using proper risk management. Make sure you're risking accordingly. Okay. So right here too. So we're going right now. It's the same thing. Accumulation. It's in the accumulation stage. Accumulation. All of this accumulating. And why do they accumulate? Because they're gathering contracts. They're gathering buyers. They're gathering sellers. Buyers, sellers, buyers, sellers, buyers, sellers, buyers, sellers. They're practically trapping people into the market. Everybody that got into this trade over here, they're trapped. Because if you got here and you didn't get out down here, you're still in the trade. So it's in a range. Like this should be your buys, this should be your sells. So it's ranging. It's in a range. It's not going anywhere right now. It's just stuck. So they're just gathering contracts, gathering contracts, gathering contracts. So that's basically it, guys. Like that's the strategy. You just gotta keep an eye out. You could actually go to the 1 minute and like try to like you could actually snipe the market in the 1 minute. Now that you know that the market is accumulating, you could look for entries like this, constantly getting out entries. Look at this entry right here. Like now you could snipe it. Like look, that's a beautiful entry right here. Like you put your fibs. Look, the market came to the almost to the stop loss. So right now it's on a buy, right? Buy. So what does that mean for EU? It's on a sell. Look, you put your fibs. It's at the OTE entries right there. That would have been your sell right there. Sell. So remember, anything below the 50, you buy. Anything in top of the 50%, you sell. So right now we're in buys, and here we're in sells. And as you guys could tell, they move identical, just in the opposite correlation. Look, you got that range, you got the range here, you got the OTE entries, you got the OTE entries, you got that wick over here. Look, that's like, look, this wicks, that's the stuff you want to look for. That would have been a perfect entry. It came, it filled this whole gap, this imbalance, right? You see that imbalance there? Same thing here. You have the same imbalance. It filled the imbalance. So if you would have had like some limits there here, like some sell limits, that would have activated and you would have been in profit. How much you would have been in profit? You would have gotten in the low of this wick, like not much, like 3 pips, but you could aim to catch 11 pips, right? Imagine you drop a standard in 11 pips, small risk, because you're only risking, how much are you risking in the sniper entry? You're only risking like 2 pips. You're barely risking anything. So these are the kind of entries I like. I like to snipe the market. Slow, like small risk, high reward, right? That's what it's all about, finding those sniper entries. But in reality, the one we want to catch that sell. We want to catch that sell here, and we want to catch that buy. We want to wait for that buy to happen. So that's it for the EU DXY strategy, guys. Any questions? You got any questions, Sal? Everything good? All right, cool. Just feel free to stop me anytime you want. I'm here to help, bro. I'm here to making sure you're understanding everything that I'm saying. Like if there's any questions whatsoever, just ask me, bro. Let me see. Do I have my volume up? That's probably why I can't hear you. Can you hear me now?
Oh yeah, I'm hearing you.
Okay, my bad. I had the volume down. Do you have any questions?
Not really. I came on late, and this is the first time I'm seeing this, so I'm kind of just taking it in.
Okay. Either way, I'm recording the call. I'll be dropping it, but I will just
Mhm.
to go over it a little bit again. I'm talking about the EU DXY strategy. So DXY is the dollar, and EU will be the Euro USD, which you know, right? So if you know where the dollar is going, you'll know where the EU is going. Okay. So as long as you understand where the dollar wants to go, right?
Mhm.
So you're gonna always like the same thing. You're gonna start in the bigger time frame. You start in the bigger time frame. You want to figure out if the market's at a premium or a discount, right? So
Mhm.
anything below, anything below the EQ is a discount, right? This is where you buy. Anything in top of the EQ, which is the 50%, is where you sell. So these are my Fibonacci. I don't know if you know the fibs, but if all you gotta do is put them from.
Yeah.
Okay, so that's basically, so now it's at our OT entries, which is a key area in the market, right? The OTE right here, these retracement zones, that's where we want to look for that sell. Same thing here. Now we go to the EU, we look at the range.
What's a G spot?
The G spot will be like another OT entry. So let me
Oh.
tell you the exact coordinates. So the G spot will be the 70% retracement.
Okay. Okay, gotcha.
70%. So when the market retraces 70%, that's when you want to try to like look for sales. But don't just jump on a sell right away. You want to wait for extra confirmations. Because like I said, there is a gap right here that needs to be filled. The market might continue going all the way. I like more or less, I like this area high, this high, like maybe here, you know? And always
Mhm.
put your stop loss in top of these highs, right? That's where your stop loss is going to be. So if you decide to go for a sell, you want to measure this out, which is a huge stop loss, right? That's what we want to wait. We want to wait it out. Wait it out until we see a small retracement. But like right here, for example, in this entry, your stop loss will be in top of this wick. So now we measure that. That's still 146 pips, right? So we want to wait. We want to wait until we have extra confirmations to find like a nice sniper entry. Personally, I like to find entries in the 1 minute. Like for example here, we will put our stop loss below these lows for this buy. Now look at the stop loss. The stop loss is only 2 pips. So you're risking 2 pips. That's the kind of entries I like. When you're risking like
Okay.
5 pips. So now we go here, same thing. So our stop loss will be up here in top of that high. I don't really go by the stop loss. I go by the highs, right? I always put my stop loss because the market needs room to breathe. So right here, our stop loss will be around 5 pips. So you're going for a sell, going for a buy, and that's beautiful. That's a beautiful entry because why? You're only risking very little to catch, and we have the opportunity to catch this whole drop. So look at that. So we're catching this whole drop, but in reality, the one we really want, we want to catch that sell. So the buy, we want to catch the buy here. But what I suggest is just watch them when they're live. When you're trading live, watch them both at the same time, and you're gonna be able to
Mhm.
actually see it for yourself how they actually move. Once you start figuring out, once you start catching these wicks, because at the end of the day, look at all these wicks right here. Look, a lot of wicks, wick. It's showing signs of reversal right here. Look, wick, which it could also be they're trapping more people because they want to drop it more. So they're trapping people to sell because they want to bring it even more higher. Okay, that's
Okay.
the that's the EU dollar strategy. You put them next to
But
each.
they move, do they move together,
They
like
do.
exactly together, or is there a lag between them? So
No,
you can see this one, if, for example, is selling, so you know a couple minutes after to sell the other one, or
same,
it's together.
same. They move at the same time. Check it out. Like, look at
Okay.
this wick. You see this wick right here?
Yeah.
Let's look at the time on that wick. So the time in this wick was at 23:02, right? Now look at this wick over here. It's the same wick. Look at the time, 23:02.
Okay.
So that wick was created at the same time. They're very correlated. Like 100%. I say 90% of the time, but it's more like 100%. I say 90% because there's always manipulation, and you never know when manipulation occurs. So they might not move the same, but 100% of the time they're usually moving together. Look, after that wick happened, what happened? They created more wicks. Like look at all these wicks right here. Let's look at the time in this wick. Look at the same time. So this one's 23:09, and this one over here. So let me see, what's that wick right there? 23:09.
Mm.
So all those
Okay.
wicks were formed at the same time. Same time. They practically move.
Okay.
They practically move the same. Look, 20, boom, 23:29, 23:28. Like literally almost at the same time. Look at this one right here. Look at this one right there. You'll see it. You will see it. Once you train your eye to see it, you cannot unsee it no more. 23:38,
Mhm.
23:38. So they're creating the
Okay.
same pattern at the same time.
Mm.
That's why this strategy is so important. If you want an easy strategy, this is like the easiest strategy there is. This was the first strategy I learned like when I first started trading.
Mm. Okay, so I have one question. Maybe you went over it, but I didn't catch it. So let's say you are waiting for a sell, that's your bias. What is it that you're waiting for, let's say on the 1 minute time frame to indicate you should enter? What's your sniper entry?
So right here, I will sell. I will sell because it meets my criteria. Once again, so I put my fibs, high is high to low is low. Look, it's at the
Mm-hmm.
OT entries, OTE.
Mm-hmm.
This is the area I like for sales.
Mm-hmm.
My stop loss will be over here. And then you just gotta measure your stop loss. Just risk it, So it's 3 pips. Risk accordingly. You could actually over leverage a little bit, because it's only 3 pips. You could drop if you have a 10K account, you could drop a standard because you're only gonna risk $30 to catch maybe
Okay.
the continuation to the downside, right? God knows where it's gonna go. You might go 30, 40 pips, continue to drop. right? So at the end of the
So
day,
you,
the main thing when you trade is just measuring your stop loss. Like how long is your stop loss? So right here, made my criteria, right? It feels the imbalance. It feels the imbalance. It's on my OT entries. Um, there's like a there's like a old order block over here. Like you can find a lot of stuff in this area that indicates that it's gonna sell. And then look, it's showing us the candles that I spoke about. You got like a shooting star. You got a lot of wicks happening here. Like a lot of hold, like it's holding. The market's holding there. So most likely this trade is going, like if you got into this trade over here, that will be your sell. You put a sell right there. So right now it's accumulating. So it might continue to drop. You'll be able to catch at least 10 pips. So you're risking 2 pips, like 3 pips to catch
mm,
10 pips, 11 pips, because your target will be this low right here. That will be your target. Your first target should be this
okay,
low, right? That will be your first target. Then target number 2 should be here. And then you just like, you gotta look at the DXY. What is the DXY doing? So your target in DXY will be right here and over here. Boom. Those are your 2 targets.
okay.
And at
Do
the end
you
of the day,
use breakout structures?
do I
Do you
break
use
it
that
off?
as part of? Oh, okay.
No, I don't do no breakup structure. I do everything based on institutional trading. Breakup structure is cool, but I think the banks know that retail traders trade based on breakup structure. So that's why they do some that what I told you earlier. That's why they do the PO3. Because
Mm,
in the PO3, right? What they do, they will show like a breakup structure maybe to the upside, and people think it's
mm-hmm.
a buy, and then they will drop it on them. Boom. That's what the PO3 is. So we're waiting right now. Look, if you look at the bigger time frame, it's in a big accumulation form. It's just accumulating. Look at this whole accumulation right there. Accumulation, accumulation, accumulation. So let's say if you're trading based on break of structure, right? If you see this thing break to the downside, yeah, you might
Mm-hmm.
catch a quick bag, but if you didn't get out early, they're gonna bring it back up. You know, they're gonna take you out because the banks, they're greedy. They don't want nobody to win. That's why they do the PO3 accumulation, then they do the manipulation, and then the real move. That's the one you want to catch.
Okay. Right.
Yep. The strategy is simple. The strategy is simple. It's not overcomplicated. Like once again, you went to my OTE entries, it's starting to sell. Look at here, same thing. There's not overcomplicated. You put your fibs. Let's look at it again. So right, the 5 minute here, 5 minute here, boom. So let's zoom in right there. Same thing. So you put your fibs. You came to the OTE entry right here. There's the OT area, right, more or less right there. Look, you see that wick. So this one get wicked out. That was the buy. That would have been the sniper entry right here. If you got in on that buy, that would have been the you want to find like those refined entries, like something like that. That's the type of stuff you want to find. You want to find like
Mm,
shooting, like that shooting star, like shooting star here. You have a hammer here. That's the entries you want. Like small risk, like the because your stop loss. Remember, your stop loss is always going to be below this lows.
right.
Here, your stop loss is going to be in top of this highs. So that will be your sniper entry. I'm all about sniper entries, like, because why? There's small risk. Once again, we're risking 4 pips to catch 10 pips. That's a good ratio, right? 10 pips. If you could catch 10 pips a day consistently, you'll be set for life. You'll be set for life. And
Hmm.
that's what you need. You don't need to catch 30, 40, 50 pips. If you could catch 10 pips a day consistently, you're set for
Mm-hmm.
life. Because 10 pips a day with a small risk, high to reward ratio, you could actually over leverage a little bit, you know, because you're only risking so little. So those 10 pips, if you
Right.
drop a standard, that's $100 that you're making every trade.
True. Okay. This was a good session. As I said, I got on late,
Excuse me?
but as I said, I came on late, but
Mm-hmm.
I saw a good bit. So I'm gonna go over it. I've never looked at the DXY before, or this relationship it has with the other pairs.
Mm-hmm.
So I am gonna go do some back testing and check it out myself.
Yeah, that's the best way you could do it. Like my first mentor that taught me this strategy, he told me like DXY is basically the Michael Jordan of Forex. Like if you know where the DXY is going, you're gonna know where all the pairs are going because the dollar is the king.
Wow. Okay.
Okay, so
Cool.
that's basically the EU dollar strategy. This is some good sauce, guys. I hope you guys liked it. Um, I'm actually gonna
Thank-
go over one more strategy with you guys. I'm gonna go over the other strategy that I've been lately working on. It's a little more complicated, but it has to do with correlations. So US 30, XPX, and NAS 100, right? They're very correlated. As you guys could see, we're in the 1 minute right now. And look, they all did the same thing. They did the same thing. You got the same time right there, right there. Look, 22:51. They all created the same wick at the same time. These ones are super correlated. So it's a little more advanced than the EU DXY strategy. But if you could understand the previous strategy that I just taught you, you'll understand this one as well because we're using the same concepts. We're using the same concepts right there. Look, so they all created that wick at the same time. So the way this strategy works is it has to do also with premium discount and with premiums with the knowing where the premium is and when knowing where the discount is. And what am I referring to by knowing where the premium and the discount is? So same thing, you're gonna draw your fibs, right? You're gonna go from lowest low to highest high. Same thing here, lowest low to highest high. Actually, let's do it from this range. That's the range right there, boom. So that range right here, same thing. So that's our range, right? So like I said, anything in top of the 50%, so it's 5 minutes. Right there. So anything, and remember, so you guys always understand, first, before you go into a trade, the reason I want you guys to do your fibs is to find out if you're going to sell or buy. It's key to know where the market is at. So as you guys could tell here, right here, this will be our premium area. So anything in top of here, you sell. Anything below the 50, you buy. That's the rule. You're always going to sell the premium area in top of the 50%, you're going to sell. Anything in top of the 50, you sell. Anything below the 50, you buy, right? Same thing here. Anything in top of the 50, you sell. Anything below the 50, you buy, right? So now you want to find key areas in the market. Personally, as you guys could tell, the market is more or less here in the 50, here's in the 50, here's in the 38%, right? So right there, I wouldn't trade. Where the market is at right now, I wouldn't touch it. I don't like that area to touch it, right? I want to wait for a nice pullback, a nice retracement where I will get in. You know, normally what I will wait for the market to come maybe to this wick. So I will point out this wick here, right here. This will be my area where I would like to sell from. So I would like to see the market come to the top of that wick. So I'm gonna go like this somewhere here, and that will be the sell. So I will wait for all of them have to do the same thing, right? All of them, I want to see all of them come to that area. And once I see all of them come to that area, that's where I'm gonna sell, right? So I'm just giving you an example of how my mind works when it comes to these pairs, right? I would like to see that. I would like to see all of them come over here, or in the opposite way, right? I will like this wick. So we got this wick down here, that wick right there. So if we gotta look at both ways, right? So maybe the market comes here, and that's where I'm gonna buy from. So like I said, discount area, premium area, discount area. Discount area we buy, premium area we sell. It's simple. The strategy is not hard at all. It's all about knowing where to buy and knowing where to sell. Always sell from the wicks, like from this wicks. Why? Because you're gonna put your stop loss below here, right? Right there. Your stop loss is gonna be give it room to breathe, right? And it's always a sniper entry. We're only risking we're risking very little, probably like 1 pip. Like look, it's 1 pip. That's crazy. We're risking very little. We're risking very little to catch a lot. That's the whole purpose of this game. So here, I would like to see a market come down here, and that's where I'm going to buy from. So those will be my two possible setups, right? And that's basically a strategy. It's simple. It's simple. Like it's not over complicated. We're going to wait for the market to come to our premium areas or discount areas. Wait for some nice wicks, some price action, and then we sell or buy. But that's basically it. That's the US 30, and I use the same thing, guys. I use like the same areas. Like you gotta know your areas, like your. So right here we have an imbalance. You know we need that imbalance to get filled. Right here we have another imbalance. This good to know these areas because you know the market is gonna come to those areas because it needs to fill them. Those areas need to get filled. Like look at this huge imbalance right there. Look, it's filling it right now. So most likely it's gonna fill it, and that's when we're gonna buy. So right now that's what they're all gonna do. It seems like they're all coming towards this. So if you see one shooting down, like Nas specifically, I think Nas has more control over this too. Some people say XPX, but it always varies. You just gotta watch them at the same time. That's why this is I have my three charts lined up next to each other. I'm watching them all closely. So I'm looking to see for like shooting stars, DOGs, some sort of reaction that is gonna give me a reversal. Because once you could see that where the reversal is gonna happen, you just gotta risk. You gotta pull the trigger. Pull the trigger. Trust yourself. Don't be scared. Oh, but risk the best way is to risk accordingly. Like risk accordingly. Don't know if you scared of trading is because you're probably over leveraging and you're not comfortable with that feeling yet. I over leverage all the time, but because I'm risking very little. So I know what I'm doing. Like I'm over leveraging, but I'm risking very little. I'm risking like it's small stop losses, right? So I will get in right here, risk like what's that, 18 points. So very little. I'm risking very little to catch that whole drop down. Like even if it stays on that range. And one thing about these pairs, you don't wanna be greedy. You know, like if the market's giving you 2, 3, 4, 5 pips, 10 pips, take it and go. Take it and go. Cause these pairs they pay really good. These ones they pay that better than any pair. And once you master it, you'll be able to catch so many pips. These pairs are like this strategy right here is like sauce. What I just gave you is sauce. This is the sauce, guys. This is the sauce. Like same thing, back test. I want you guys when the market starts this week, line them up. Like I don't know whichever one you prefer. If you prefer EU dollar, that's a good strategy as well. Or US 30 SPS and NAS, that's a good strategy as well. Use them both. You know, if somebody's trying to tell you, somebody sends you a signal for EU, now you know. Now you know, okay, let me see. They're doing a buy or a sell. I want you guys to take like analyze, think about what you're doing. Like, okay, why is it a sell? You know, because you came to my OT areas, it looks like a sell. Right here, look. The same thing with the dollar. You came to my OT areas, it's going for the buy. Same thing here. Like but US 30, like I said, the OT areas for US 30 is almost the 100%. Like wait for the market to come to like real tight because these pairs what they like to do, they like to liquidate. They like to take highs out and then they'll drop. You know, so once you see some highs get taken out, it might even go to this high over here, right there. So boom, that's when you want to sell. Wait for be patient. Wait to see like some reaction. Wait to see some wicks. And also, if you see like one dropping real fast, and this one's having dropped, guess what? They're gonna follow this one. You know, so So you just gotta keep an eye out, like train your eye to see it, train your eye to see it before it happens. That's the best way to do it. And like, and you're gonna be like, yo, I missed out on that trade, but I saw it. That's good. That's good. That was me at first. Like, I'm like, yo, it's gonna sell from here, but I was scared to pull the trigger. And that's how I built my confidence when I started just marking it up. And then I'm like, yo, it's gonna sell from here. So what I will do, okay, what will happen if I sell right now? Then the market will come, sell, and it will go my way. So just trust yourself, trust your analysis. As long as you're having good risk management, you're gonna be fine. Because if you're having good risk management, you're gonna lose trades. It's part of the game, but you're not gonna blow your account. You're not gonna blow your account. Your stop loss will be over here, like same thing. Stop loss there, stop loss there, stop loss there, and like proper risk management. That's the key. That's the sauce too. Proper risk management, guys. So what do I mean by proper risk management? Once again, if you guys are doing these funding challenges, I'm doing a 20K right now. So for the 20K, what's proper risk management? I'm risking per trade. I even wrote it down in my wall. I have my trading plan right there. Like for 20K, I'm risking between $100 to $200 per trade or less. Like 100 minimum or less, or 200 minimum, right? Which means that I'm risking, but let's not look at the money. Let's look at percentages. I'm risking 0.50% or less, right? Per trade, or max 1% max per trade or less, right? So you should always take this into consideration. And if you don't, you're gonna hurt. You're gonna be hurting, and you're gonna blow accounts, and then you're gonna go through what I went through at first, because I didn't want to listen to my mentors when they told me, yo, have a trading plan, have proper risk management. It's not about getting rich quick. A lot of people want to go ahead and drop 50 lots, 50, 100 lots, in US 30, just because they're greedy. They want to get rich now. It doesn't work that way. You gotta use proper risk management. There's some trades that you'll be able to risk a lot as long as you're using proper risk management. And then what you're gonna do, so now you're gonna risk between 100 to $200, right? So let's say you wanna go in for this sell here. Your stop loss is over here up top, right? So you wanna measure it. So right here, from here to here, how much am I risking? 1 point. It's a sniper master entry. 1 point. That's crazy. 1 point. 1 point risk. Let's look at this one. So if you're going for a sell right here, so how much is the risk? 2 points. 23 points, right? So what you're gonna do, now you're risking $100. You're gonna go ahead and put your $100 and divide it by 23. Okay, Google, what's 100 divided by 23?
100 divided by 23 is approximately 4.35.
4.35. So what's 4.35? 4.35. We're talking about $4.30 per pip, right? 4.35, yeah. 100 divided by 23 is $4.35 per pip. So what does that mean? That you're going to go ahead and drop a 0.435. 0.4. So that's what you're going to drop. That's what proper risk management is. 0.43. And trust me, if you guys don't do this, you're going to blow accounts. You are going to blow accounts if you don't do proper risk management. You are going to blow accounts. If you're trying to get rich quick, it's not going to work. You have to do the math. Do the math even before you even trade. You got to have your trading plan in the wall. You got to know how much you're going to risk, how much you're going to win. So you want to risk between 0.5% or less, and max. If you hit your daily loss, this should be your max. If you lose 1% for the day, you don't trade no more that day. You don't trade no more. Why? Because what happens to you psychologically is that once you had too many losses, you're mentally unstable. You don't know, at that point, you're trading emotional, you're trading irrational, you're just trading based on emotions. So in order to avoid you blowing your account, you have to be disciplined with your trading plan and your risk management. So your trading plan says, if I lose 1% max for that day, you don't trade no more. Trust me, you don't want to trade no more. Why? Because after you had so many, let's say you did 5 trades in a row and you hit your daily loss of 1%, after that, you're psychologically unstable. You can't trade no more unless you know what you're doing and you've been through a lot and you're a veteran and you like got experience. But even at that point, I don't suggest to trade no more. Stick to your trading plan. Stick to your risk management. That's the key, guys. You could have the best strategy in the world. You could have the best mentor in the world. I could teach you all the sauce in the world, but it's all gonna come down to this. You have to use proper risk management and have a trading plan. And be okay. So now you know how much you're going to lose. That's your max loss per day. Then you also want to know how much you're going to what's like your daily target. So what I suggest, same thing. Your daily target should be between 0.5%. Like if you go into a trade and it's already in 0.5% in profit, right? Is the trade is blue, then it goes to like 1%, right? That should be your target. That should be your target. If it comes to 0.5% and 1% and the market reverses on you and you didn't take no partials, that's on you. That's on you. If you didn't move your stop loss to break even, also trade management, right? Trade management is key, guys. So now you know this is your target. So if you see 0.5, 1%, take some partials. Take some partials. If you see the market reversing, close it out. Don't be attached to the trade. Don't be attached to the money. Look at it as percentages, because what happens to people is like they get a good sniper entry. For example, here, let's say you would have gotten in the sniper entry. Like that's a sniper entry. Look at the fibs. Right there, right there. Went to the OTE. It filled the imbalance. So that would have been a beautiful entry, right? It is a beautiful entry because right now you're still in profit, right? You would have been in profit 50 points. That's pretty good. 50 points in profit. That's decent. That's a decent trade. But what happens to a lot of traders is that they're so greedy. They're so greedy. They don't want to close out. So what the market does, it starts coming back, it takes them out. And what happened? A winning trade became a losing trade because it hit stop loss, then it moved stop loss to break even. So all of these things you gotta put them into play. You gotta apply action, guys. What I just taught you guys will set you free. It will set you free. You want to be good traders, you gotta have good risk management. You want to have a trading plan, and you want to have like a good did I say trade man? Yeah, trade management, trading plan, and those are the three: risk management, trading plan, and what else? And the other one, whatever. I'm all mixed up right now. Anyways, that's the sauce, guys. There's nothing else, nothing more that I could give you. Like with this, you should be set for life. As long as you follow the trading plan, as long as you have a good trade management. Yeah, that was the one that I was trying to say. Trade management, like move your stop loss to break even, take partials, move your stop loss, trail. Like if it's blue, it's on you. If it's blue, it's on you. You feel me? You could have the best entry, and then you got greedy, and you didn't get out, and a good entry became a losing trade. That's not allowed. You shouldn't allow that ever to happen. If you're blue, make sure you're taking partials, guys, because the market is always going to reverse. The market is always going to come back. It's not going to be like that one trade that just goes on forever. Like here, this was a good trade, but look how many times the market came back to that area. Look right here. So if, let's say you would have gotten on this sell right here, you got on this sell right here. The market dropped. It moved 235 points, but then it reversed. It reversed, right? So you could have had all that money, but the market came back on you. And now you had your stop loss here, right? Like that, let's say that was your entry. You move your stop loss to break even. If you had your stop loss in break even right there, you would have been straight, right? Because it would have kept going your way. But let's say you were trailing it, right there. So you didn't take no partials, you didn't take nothing. You only made like 42 compared to making 220, 30 points, right? So that's what I'm talking about, right? So right there would have been another sniper entry too, though. Like, look, you put your fibs, it came almost to that. That would have been a sniper entry. These are the entries I like. But this one actually went a long way. Look, it went for like 393 pips. Those are the entries you want to look for. That reversal. You know, it comes, it drops, it reverses. That would have been. I think I actually caught this sell. I caught this sell last week. You know, but I'm not being greedy. I think I closed it out like over here. Like, why am I going to hold? Like, I mean, I hit my target. I closed out. I went to sleep. But I could have held it. You know, I could have held it longer. But now, look, it's at an order block right now. So most likely it's going to come back again. The market is going to come back again. Remember, they're greedy. They're not going to let you win. They're not going to let you hold your trades for too long. You know, unless you're trading with the banks. Like that would have been a really good sell. Boom, sell setup. That was a beautiful sniper entry. Boom, right there. And it dropped. And I'm pretty sure you could see it in all of them. In the 4 hour. Same thing. That was your sniper entry. Look, the market dropped, came back up. Sniper entry right there. Beautiful sell setup. That's a sell. Boom, drops. In the 4 hour here too. Same thing. Market drop, it came back. Sniper entry right here. But it also came back once more. Look, it came back again. So it's always going to reverse. It's always going to come back. Most likely, it's going to come back again. It's going to come back and take all this liquidity out again and then drop again. You got it. Like, they're not going to let nobody win. They're greedy. They're going to come back, bring it up on you, and take everybody out again. Same thing here. They're going to come back, take it. So if you catch entries and you're catching sniper entries, as long as you're paying yourself, as long as you're taking partials, as long as you're moving stop loss to break even, as long as you're trading stop loss, as long as you're using proper risk management, as long as you have a good trading plan, that's the sauce, guys. The sauce at the end of the day is not the strategy. It's how you implement your trading plan, your risk management, and your trade management. That's what's going to set you free. Because these strategies, they're pretty solid. And I'm pretty sure there's other strategies out there that they're amazing, you know? But as long as you use the key at the end of the day, it's going to come down to those three things: trade management, risk management, and the trading plan, guys. Any questions? If you guys don't have any questions, I think that's it for today. I'm always here to help, and like whatever you guys may need, just let me know. Hope you guys got some sauce. You guys are going to implement everything I told you: trading plan, risk management, and trade management. Like I said, you could have the best strategy in the world, but if you could take something away from this call, I want you guys to write down your trading plan. Like if you have a 10K account, 20K account, 100K account, do the math. I want you guys to sit down and do the math. I want you guys to figure out how much is 0.25% on my 20K, for example. I know how much I'm going to risk. On my 20K, I'm going to risk between $100 max to $200, right? Or less. If I could risk less than $100 per trade, even better. But make sure you guys have your math set up, right? That's what's going to help you out a lot. Okay. AG, you got any questions? Sal, any questions?
No, man.
All right, cool. Hope you guys learned something. I'm always here to help. Whatever questions you guys have, you guys are in my Telegram. You have my DM. You got my Instagram. I don't know. Just hit me up. I'm here to help you guys. Okay.
Sure.
Appreciate you guys. You guys have a blessed day. Thank you for hopping on. Let's keep running the play. Make sure you're studying. Make sure you're back testing. Make sure